It's time to take another look at silver. Back here when people were calling a top, I was saying at the time that silver still needed to produce that big, violent catch-up move, needed to catch up to gold and the mining stocks. So it was too early to expect a top back here, and of course that's what we're getting now. But now the opposite uh, comes into play. This is not institutional money that is chasing this move. This is dumb money retail traders that have now become convinced that silver is guaranteed money. That's why we're getting these big moves. You're getting um, dumb money traders that are willing to hit any bid or any ask to get in. They're panicking in. And this is the fuel for a very wicked correction. So now I'm not calling a top here by any means. I originally thought we might even test the baby bull high before this is over. We still may. Kind of think we might probably come up just a little bit short just to catch everybody that is expecting a full test of this top. But anyway, either way, um, you know the exact, you have to do the opposite of your emotions. So as this rocket launch moves progresses, um, the vast majority of people become more and more confident that something has quote unquote fundamentally changed in the metals market or the silver market, and it's never going to go back down, or if it does, it's going to be very mild. And I can assure you the next correction is not going to be mild. This kind of a rocket launch move guarantees it is not going to be mild. Reason being, you're getting a lot of dumb money chasing right here. So these people are buying late. They should have been buying down here at the bottom. This is where we were buying. And uh, you know, these people were nervous. They wouldn't buy all the way up. And now that we're starting to get a parabolic move, now they're confident. Now they're buying. So you're getting a lot of late buyers here into this rocket launch move. And you can see on this chart just how far price is stretched above this is the 200-day moving average. If you're a smart trader, professional, you know how markets behave, this should make you more and more nervous, not more and more confident like most people become. The further price stretches away from the mean, um, it, I call it the rubber band theory, that the farther the rubber band gets stretched away from the mean, the more violently it tends to regress back once the last buyer has bought, and then there's nobody left to keep pushing price higher. Right now, we've still got dumb money traders that are piling in, 18 weeks into this rally, thinking that this is guaranteed money, and that there is no risk in the silver market. But I assure you, there's huge risk. The further we stretch away from this long-term moving average, the greater the risk becomes, because at some point here, we're going to run out of buyers, and we're going to start a profit-taking correction. It'll just be a profit-taking event. Doesn't mean anything has changed fundamentally for the metals. And once the correction is over, silver is going to go back up and make a higher high. But we're setting up for a very hard correction when it occurs, because all of these late buyers, whenever the correction does start, and these people, as price starts to go down, institutional traders, people that can think logically and put their emotions aside, the people that are getting nervous, the bigger this gap becomes between price and the 200, as these smart money institutional traders start to unload their shares and their ounces into this rally. And then once there's just no buying left and the market starts to correct and go back down, you're going to have a steady supply of late buyers that are going to go negative on their trade, and they're going to get stopped out. And there, you can see there's a lot of them between where we took off here and now. So there is going to be a huge supply of sellers from wherever this tops to this initial launch point. So you can pretty much bet the farm that once the correction starts, silver is going to go back down to here. It's going to stop out everybody that bought late into this rocket launch event. So you can just plan on silver coming back to, probably at least the 17 level during a correction. So I go over this at every turn. At bottoms, when everybody is negative, I want to be bullish. At tops, when everybody is bullish, I want to be negative. Doesn't mean I want to short silver. I do not want to short silver. I don't want to short the metals at all. There's just too many people in the bullish camp at this point, and prices stretch too far above this long-term moving average at this point. This is not a point for me to just keep piling on longs and leverage. Too much risk of getting caught at the top. And we know what happened at the top in 2011. The market topped pre-market, and then by the time the market opened Monday morning, you were already caught and you'd already given back many days of gains. So that's what can happen when one of these moves tops. So you're kind of playing musical chairs right now. As everyone gets more and more bullish, we're approaching a point where there's just no buyers left, and there's no institutional buyers here anyway. This is not a move that's being pushed by institutional money. This is a move that's being pushed by retail money that's panicking into a market. And I knew this was coming. This happens at the end of every intermediate rally. It happened here at the end of the baby bull, and we saw the same sentiment here. Traders assumed that this rally meant that silver was bulletproof, was never going to go back down, and then of course look what happened. So the same thing is happening now. You've got a lot of dumb money traders that are piling in. Everybody's on the same side of the boat. They think that silver is never going to correct, and if it does correct, it's going to be very mild. And these are not the conditions for mild. A correction like this is, at the very minimum, it's going to come back down and test the 200-day moving average, simply because the rubber band is just stretched too far to the upside right now. And it may get stretched even further. Maybe we can make it up here close to 21, but that will just stretch even further above the 200, and it will just guarantee that the correction will be even that much more extreme. So now isn't the time for throwing caution to the wind. Now is the time to be getting more and more nervous as price gets further and further away from this long-term moving average.